Hello traders, I have some overbought tickers over here to get some bearish exposure. First things first, let's review what we want when we are in an overbought state. First off, of course, we want it to be overbought. The second thing is that we want there to be some sort of a resistance or supply zone where we can get short and have perfect location or positioning. And then the third thing is going to be, it's optional, but it helps, and that's if you have a fundamental catalyst that works in your favor. So those are three things that we generally look for. Three type of trade structures that we're going to be looking for bearish exposure in this type of current market where you can't just straight up buy options because volatility is so high. So you need some creative ways to get bearish exposure. So shorting is just one of them, and that's the clear one that most people think of. The second one is selling calls, and the third one is downside calendar spreads. So those are the three ones right there to get some bearish exposure. The first thing that I wanted to take a look at right here was Peloton. Now, Peloton has been flying higher because everybody's been staying at home. It's one of those stay-at-home stocks, and it's been holding up. And I guess we can actually draw a trend line right here, but it's been holding up because of these moving averages. And so, a little bit of a trend line right there. But it is getting into this overbought state, and it can't stay there for too long. It was an overbought state earlier, and what happened was it just consolidated sideways. And now it's starting to get into that overbought state. And I think we're going to see this sort of a situation again, where instead of going to the top and having a resistance point right here where we go short, I would actually go ahead and I'd sell some calls right here at this resistance point. Very similar to how we had what is now support, but previous resistance right here, where you go out and you could just sell calls, where what happened was to cool off that RSI, instead of having a big pullback, since there are two ways to cool off an RSI. To cool off an overbought RSI, you can either have A, a pullback, or B, just some consolidation where it goes sideways, and you spend some time in a certain price. And that's what happened. It went sideways for 2 weeks. And I think we can see sort of situation like that again, where it can just trade sideways again. It can just chop sideways. But this is a resistance point to be watching right there, and that is where I would sell those calls, sell them out a week or two, and just wait for the theta decay to work in your favor. So also call some call spreads. And that's really the way that I go about it. The reason I don't want to short is because there doesn't seem to be a large pullback. Right here, of course you could have shorted, but then it didn't really have that much follow through. It came down here, but it didn't crash all the way down, and that's because of what's going on with the fundamentals right now. There just isn't that fundamental catalyst yet for a full-on bearish thesis on Peloton. But I think if you're looking to get some bearish exposure, going on a Peloton and selling some calls at this resistance would be the best thing to do. And I think that for the RSI to cool off, we should simply just be in a situation where we see this thing pull back, come up, pull back, come up, and it just trades sideways. And this trend line likely will be broken. It doesn't mean, though, that the trend is broken. If a trend line breaks, if you have that bullish trend line and then it goes through and then it breaks, it just means that you went from a bullish state to a neutral state. It doesn't necessarily mean that you're bearish now. So I'm just expecting some choppy sideways action on Peloton like we had earlier when it was overbought. Sell some calls up this resistance. Shopify. So let's look at Shopify on a daily time frame. It is quite overbought, and I would say the best thing to look for on Shopify is to zoom in and look for a good point to start getting short. This one right here, I'd say that you have the better opportunity of getting short rather than selling calls or downside calendar spreads or anything along those lines. And so what I'd do is that I would zoom in, and I was actually looking at this earlier on the 15-minute chart. Now look on the 15-minute chart and try to find the best place to get short. And so the area to be watching, and I'll put a horizontal ray right here at that level, and then just look for some bearish exposure from there. But if you get short at that level, put a stop right above it. That's the way to be getting short on Shopify. And it won't take much for the RSI to cool down, but at least you can get a quick trade down to about this level right here at the 870, I would say. And this thing has essentially just flown up. It's been one of your stay-at-home type stocks, but it's flown up big time from oversold all the way now to overbought. And after it got overbought, it did have a pullback, but then it got overbought once again. I would say we might be due for another pullback, and that's why I would look for a short, put a trailing stop, and just let it run. Okay, Spotify. This one is up quite a bit. So we can see Spotify RSI levels that we have never seen before. And it just went straight up, rocketed up from $100 all the way up to $275, I would say, intraday. So what are we looking for on Spotify? So it's already started to come down now. So what can we do now? So of course, if it was a top, it would have been great to short right there, or sell some calls right there. But at this point, it's already starting to come down. What we can do though, so we can identify some areas of support and resistance, and be aware that if it ever gets to those areas once again, that we might have an area that we would like to short. What I do right here is that right here, I would though go in with a calendar spread. So I would buy a put that expires at around that level, that expires a month out, and then sell a put on that expires only a week out, and then do that consistently, and you get some downside exposure that is bearish. And for a calendar spread, your max profit is the strike prices. But that's what I'd be doing, because it's too late to short unless you do think that we could see a situation where there could be a retest up to this level, but it's too late to short. You could definitely though sell some calls up there. So selling some calls on this level would be something you could do. But right now is having a situation where it's just contracting. There's massive volatility contraction. Right here, you see this big green bar that we had. The green bar was essentially a 10% up day, and after that is tight, and it's even tighter, and then today is a very tight day. And so eventually it's going to break, and it's more likely to break bearish because of the fact that it's overbought. And so we can take advantage of that with that calendar spread right there. Match group. So this one is slightly overbought right here. The way that I'd be playing this is that it just topped out today, and it might reach that top again, and it usually does reach that top again. And so what tends to happen is that whenever you have a major resistance level, the price goes up to that resistance level, comes down, and then you know that it's a resistance level. Before you didn't know that it was a resistance level, now you do, because the price has come down. And then you're going to wait for the price once again to retest, and this time it's going to break, and it's going to break this level, and that's going to have follow through to the downside. So you wait for that retest. So what I would be doing is I'd be zooming in onto a shorter term time frame, and it has gone up, and then I put on this resistance level right here, and you can wait for it to retest this level right here, and wait for it to retest the resistance, short right there, limit short right there, and then above that, put a trailing stop and just let it run. But that's the way that I'd be going about it on match group. I guess you could sell some calls if you wanted. I would not be doing calendar spreads on this one though. eBay. This one's getting quite overbought, although we know that it can get more overbought. Usually I like to look at what happened in the past to try to predict what will happen in the future. So it's oversold and had this big rally until it got overbought around here. And after it got overbought, it consolidated a little bit, and then it got back into normal, but then it got overbought once again. Gap up, upside capitulation, and this sort of actually starts to look like a Tesla, where it has upside capitulation, but then it just chops sideways. Nothing's really happening other than the fact that it's chopping sideways. And so for this RSI to cool off, I would say the most likely thing that's going to happen is that this just chops sideways for another 2 weeks. So what I'd say right here is that I would go with a calendar spread. You can, by going out right here, because of the way volatility term structure is working, I would rather go out about 30 to 45 days and buy a slightly out of the money put. So we're looking at this level right here, and I will highlight it. This level right here. Buy put 30 to 45 days to expiration on that, and then sell a put, a couple of days to expiration right there. And it should give you some downside exposure, but we're really just hoping for eBay to stay inside a range. We're not really hoping for it to break bearish big time. But you do have fundamental catalyst, and that is earnings coming up. But until then, that's what I think is going to happen. Is it's just going to consolidate sideways. Take advantage of that with the calendar spreads. Or just go sideways, and the RSI eventually cools off, and you can take those off. And really, calendar spreads at the end of the day, they are slightly directional, but they're more just a theta play. They're making money from the passage of time. That's really what calendar spread specializes in. And so you can do those right there. If you guys have any questions about this, go ahead and ask inside the comment section below. If you guys have any other underlines or tickers you guys want us to review, put them inside the comment section below. We would be very happy to review those. Other than that, thank you for watching, everybody, and happy trading.